actually ahead of that pace.
Dan Ives was just on TV and he says that Tesla is on track to beat this year's delivery consensus. Dan Ives is actually a fairly good analyst. If you look at his performance in just the last 12 months, he is in the top 140 Wall Street analysts overall. Although there was a point when Dan Ives said to hold Tesla stock and do not buy Tesla stock. And that is why his average Tesla stock return is not great. But overall, he's not a bad analyst. And if he sticks with his buy rating for Tesla stock, eventually, I believe his Tesla stock return per rating is going to look really good. Technically, if you just bought Tesla stock when he said buy back in 2018, and as long as you kept all of that stock, and keep in mind Dan Ives didn't say sell Tesla stock, actually you would be up quite a bit. It would all depend on how much did you initially buy right here, and then how much did you buy right at the top. And now let's take a look at what Dan said today.
Shares of Tesla trading down more than 6% today despite record deliveries in the first quarter of the year. That deliveries number coming in at nearly 423,000 vehicles, up 36% since last year. The EV maker releasing the numbers on Sunday. We'll get full Q1 results in about 2 weeks. For more on this, let's welcome in Dan Ives, Wedbush Managing Director and Senior Equity Analyst. Also a Tesla bull. Dan, good to see you. You like these numbers. You were digging them, man. Why are investors not?
Yeah, look, I think it was just a knee-jerk reaction after a stock that's basically doubled, so far the first 3 months of the year. They beat what I'll call whisper numbers. Now I think maybe some might have been hoping for more of a beat given the price cut.
I don't think Tesla beat the whisper number, at least not the one that the retail Tesla stock investors had in mind. And there were some that were even higher than these numbers right here. For example, the billionaire Leo Cogwin, all-in Tesla stock investor, he was at 450,000 deliveries, and Ross Gerber was even higher than that. But what is clear is that Tesla beat the Wall Street consensus. I could not find a single analyst that said that Tesla did not beat the consensus. I posted this on Twitter and no one said that there's anyone else that's an analyst, not a media publication, that said Tesla did not beat the consensus, or at least that Tesla basically did not come in at expectations. I also asked about that in one of the previous videos that already got over 10,000 views, and not a single person said that there is anyone else that said that Tesla did not beat the expectations. I'm talking about Wall Street analysts specifically.
Now the debate will be margins going into April 19th. I believe margins, they held the line relative to how they guided. So I think overall, this is a major step in the right direction, a murky macro when you look at competitors.
We'll find out on April 19th.
Dan, what about the fact, though, that they did fall short of the pace that's needed to attain that goal that Musk laid out in terms of 50% annual growth? Is that still attainable?
But I mean, I think 50% was really something they took off the table on the last earnings. I mean, now, granted, the longer term 50% goal, but really the number that the street investors are focused on is 1.8 million. And I think if you look at that, they are on or actually ahead of that pace. And that's why right now, of course, there's named a lot of bulls and bears in terms of that tug of war. Despite the stock doing what it's doing, I think the bulls ultimately won this battle.
I agree. Remember, just in January, we had people saying, oh, Tesla stock is going to go all the way down to $60 and even lower. I mean, we even had a Tesla stock bull saying that if Tesla stock was at $20 per share, that would still be high in a recession. Yeah, well, we are about 10 times above that right now. And also, he is now quite bullish.
But Dan, ultimately, it comes down to this price action. I mean, we're talking about a market cap almost 3 times Toyota. $602 billion for Tesla, $231 billion for Toyota. Is that even near justified with the demand we're seeing for Tesla?
Look, and that's always the debate, right? I mean, if you look going back to Tesla Mini, they hated it at $5 billion. They despised it at $1 trillion and pulled the hair out at $600 billion.
We actually have a cherry tree outside our house, and I need to hire a cherry picker. So I went to Microsoft Bing, and I don't know. Are these good results or no? You tell me. I really don't like picking the cherries myself. I don't know if he would like to come and help me with that. I mean, I'm willing to pay, maybe not a lot, but I'm certainly willing to pay at least a little bit.
I just have always viewed it as a disruptive technology player and not a traditional auto player. That's why I view apples to oranges when you compare them just to the likes of a Toyota or others. I believe they deserve more of a disruptive tech multiple. And I think that's what you've seen happen to the stock, especially over the last few months. Now, with that said, they're held to a higher standard and they need to continue to produce. But I still think we're in the early innings of this green tidal wave playing out, a $5 trillion market in terms of EVs.
I certainly don't have much hope in Toyota. I mean, they consider hydrogen still a priority, and that's the new CEO that supposedly is really focused on EVs now, but yeah. In fact, it is so not clear what Toyota is going to do that 54 organizations demanded Toyota to shift to EVs globally as the new CEO steps in.
Dan, what about the price cuts? Clearly, they are helping sales right now. Now there's talk of further price cuts ahead. Do you buy that, given the fact, and put it in your own words, the murky macro picture right now?
Look, but they've had to ultimately rip the Band-Aid off. I think that was the smart poker move that Musk did earlier this year. It's a big reason why the stock's up. Now, of course, the debate will be, do they need to do more price cuts? I think in China, you'll see some more slight price cuts, potentially in the U.S. as well as the arms race plays out. But because of their margin structure, it gives them so much more flexibility than other vendors to do these price cuts. And I think that really continues to be the story here, especially as battery costs ultimately get reduced over the coming months and years.
Dan Ives is one of the few analysts that gets this part of the Tesla stock story. Most other analysts simply just do not get it. They are so focused on the short term that they ignore the long-term picture that Tesla is going to acquire a much bigger percentage of the auto market share, which then allows them to benefit from improved economies of scale. And that will prevent other competition from really coming in, because if Tesla already has ridiculously developed economies of scale, then anyone else that comes in, they have to sell the vehicles at much bigger losses, and you can only do that for so long.
All right, meanwhile, Rivian also has some numbers out. Deliveries down 7% in the quarter. That stock down a little more than 2%. What does this mean?
Look, I mean, Rivian's been a nightmare, right? I mean, because on one hand, you have a great story in terms of the production, in terms of what I view as an innovative vehicle, the Amazon partnership. But, every quarter it's been dog ate the homework, the wind blew it over, I was late because of traffic. I mean, name an excuse.
But that is only just a short-term thing. They have been doing great long-term, right? I mean, year-to-date, they are down 12%, but so what? That's only short-term. Let's zoom out a little bit. Okay, down 67%. Okay, but I mean, if you zoom out even more, it's going to be much better, right? No. It would appear to me that Tesla has been eating Rivian's homework. I mean, you look at the Tesla stock in the last 5 years, it's up 876%.
I think investors have gotten very, very frustrated. This is clearly a slight positive, but ultimately more wood to chop. They now need to execute to what I believe could be the power of the Rivian story.
Yeah, Dan, lay out the bull case for me, because I think a lot of people are struggling really to see the growth opportunity and what Rivian's even going to look like a year from now.
I have acquired some footage from a feature. This is GM, and this is Rivian. This is, of course, as you can tell, Tesla, obviously. As you can see, this is Rivian's homework. I wonder how long before Rivian wakes up and realizes that the homework is being eaten. The little one, by the way, is BYD, and that one is GM. GM is still asleep fully, and yeah, look at how happy Tesla is. Tesla tells Rivian, hey, look, I ate your homework. What are you going to do about it? Nothing. You're going to do nothing. You're just going to be happy is what you're going to do.
I mean, the bull case is that they'll have enough capital to navigate this. They could raise more capital. If you look at the opportunity, if you call it 10, 15% of traditional pickup or even sport utility convert to EVs with where Rivian sits, you look over the coming years, there's a company that could be doing in the hundreds of thousands of vehicles rather than 40 or 50,000. As that plays out, with eventually what will become a positive margin story. That's the holy grail. But look, I think as we've seen with Rivian, we've seen it with Farley and Ford, look at Lucid, easier said than done to actually produce and get these vehicles to customers' hands. And I think that's why Tesla continues to be their world. Everyone else is paying rent, with obviously others chasing them, GM included.
I hope Rivian succeeds. I wish them well. I went for a walk downtown not a long time ago, and when I was walking an hour later, I was like, how come I have a headache? I never have headaches. And then I realized, oh, it's all of the pollution from all of these vehicles. And when I'm away from a city, my breathing, it just feels better. I want everyone to transition to EVs faster. I don't want to breathe this polluted air.
I got to ask you about Tesla only via Elon Musk, who's also running Twitter. And the big story is this blue check. I know this is not a public company anymore, but Dives Tech is everyone's favorite Twitter account. Are you going to pay this $9 a month to maintain your blue check? Is he doing anything right to inspire confidence that a Twitter turnaround is coming?
Well, that's a rather strong question that has multiple assumptions built in it, such as Elon cannot do a great job, and therefore it is amazing if Elon does anything great. But we all know that Elon said that Twitter is trending towards being profitable, actually. That is good for Tesla stock investors because then Elon is less likely to sell Tesla stock in the future.
Yeah, look, David, great question. I think the big thing is, and of course, Briggs, one of my favorite Twitter follows as well, especially with NCAA. But look, it comes down to, I believe this is something where that overhang is starting to dissipate. You're starting to now see more of a break-even Twitter business. It's going to be an uphill battle to monetize, right? If you got into an Italian restaurant the last 20 years, bread's free. Now they tell you bread's $4. It's going to be tough to monetize that. So this is going to be a bit of an uphill battle, and it always has been with Twitter, with for paying $44 billion for something that I believe is worth closer to 15 to 20 billion.
Are you buying bread?
Again, that's going to look. I'm a believer here. I'm a believer here that it's going to ultimately appeal to some consumers and some organizations. But ultimately, I think this all needs to play out in terms of that blue check. And especially, look, for someone like yourself, now with the succession and everything else, so you're probably more of a blue check type person. But we're not all in the Briggs category. So
you're really inflating his ego here, Dan. I've got 2 hours left with him.
It appears to me that Ives is not going to be paying for the blue check mark on Twitter. But here's something that is interesting that is happening on Twitter currently. You can see that the Twitter logo has been changed to the image of Dogecoin. For about 1 second when I logged into my Twitter account, I thought, oh, did someone hack my account? What happened? Did someone change my profile picture? Because, you usually have your profile picture, but not at the top. And I thought maybe someone redesigned the whole thing, and now they put the profile picture at the top, and then I realized, oh, okay, it's fine. But yeah, Elon, you're being a legend here, delivering your promises. He did promise, sort of, that he would actually eventually change the Twitter logo to the Dogecoin image. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.